welcome Stephanie.
Thank you very much. Oh, I got the clicker. Okay. And thank you to Mike Nash and Xerox for the water and all the other sponsors for the wonderful benefits we have. So thanks for the wonderful introduction, Randy, and for all of this setup. I mean, certainly what a difference a day makes in terms of some of the news events that we've been seeing and hearing about over the last month, and then also with the Senate hearing yesterday. It was really interesting for me when I arrived at the hotel yesterday and turned on my TV and saw news clips from the Senate hearings and the Target CFO speaking. So it's certainly been somewhat gratifying for me to see how quickly people have been talking about EMV and how quickly people have gotten educated on what the benefit is of EMV and why we want to move to EMV in the US. So I'm sure that's why many of you are here. Many of you had already planned to be here, but there's probably some new folks who said, I need to get an EMV strategy for my company. I need to go figure out what this is all about. So I know many of you in the room have PhDs practically in CHIP and EMV, and some of you may be new. So I'm going to try to talk throughout my presentation to those folks who know kind of everything and all the acronyms, as well as to those of you who may be just trying to figure out what EMV still stands for and what all this technology means. Randy mentioned that this is the 7th annual Smart Card Alliance Payment Summit, but I know many of you in the room have been involved in EMV in the US or chip cards in the US for a while. My first Smart Card Alliance meeting was actually in 1996 in like a hotel basement, I think at the Marriott somewhere in Salt Lake City, when we were talking about chip cards and store value cards for the United States. And that was about 15 to 20 people in the room. So certainly we thank the Smart Card Alliance for bringing all of us together and providing this forum, because it has been really interesting to see the whole industry, even though we have different business interests and we represent different parts of the ecosystem, to come together and share information. And I think like many of you, I have a cold, so I'll try not to cough too much into this microphone. So EMV in the US. A little bit of what I wanted to cover is where we are, and I know we'll get into that later with the panel this afternoon and also in the EMV track tomorrow. What we've learned from EMV around the world, and this I'd like to just share with those of you who might be a little bit new to EMV as to how have we seen the migration around the world and kind of what the path has been in other parts of the world, what we've learned from those implementations, and how we want to take advantage of those learnings for how we're going to move forward in the US and how we're all going to get there. So a little bit of the tone of my presentation and talk is, this might be new for a lot of you. The rest of the world, by and large, has done this. We can all do it and we'll all get there. And kind of what does it mean by getting there? The primary drivers for EMV in the US, for those of you who are a little new to EMV, when we announced our roadmap in August of 2011, a few issuers had already started issuing chip cards for international travelers to improve their acceptance when they went abroad. But we also had the idea of, we wanted to lay this infrastructure of dynamic data, the dynamic EMV cryptogram, to help secure the payment ecosystem, but then also lay that infrastructure to support mobile. As Isis is going to talk about later, Jim's going to talk about, we are also trying to make sure this infrastructure that we're laying for EMV security also supports the future of payments, such as mobile NFC. And then to support the interoperability of cards when they travel and when cardholders from outside the US come to the US, and improve authorization decisions. We do have some learnings from other parts of the world where the authorization rates and payments volume has gone up with the implementation of EMV, because issuers can make better authorization decisions and more transactions are actually approved. And then also we want to reduce the reliance on static data, which is really the main benefit in getting rid of counterfeit fraud. So again, the roadmap that we've announced is from, basically the key dates on here are October of 2015 and October of 2017. Those are the liability shift dates. The early dates that we had was October of 2012, something called the Technology Innovation Program, where we wanted to at least set the tone for the market, that there was an incentive for merchants that implemented contact and contactless or dual interface terminals to get them some relief from PCI validation costs. Then the next big milestone we had was April of last year for the acquirers to be able to pass chip data. And that was a really big step, because in order to get the merchants to be able to pass EMV transactions and support that, the acquiring networks needed to do that. Then we have the liability shift, which is October of 2015 for general point of sale, and then October of 2017 for the automated fuel pumps and for the ATMs. I don't think that that is news for a lot of you, but just wanted to make sure that you knew that this is our roadmap, and we are continuing to move forward. In terms of a status for EMV in the US, these numbers are as of September of last year, the end of September, and we had about 6.6 million EMV Visa cards issued in the United States. But the interesting tidbit behind that number is that the bins that we have on the issuing side that are certified to roll out credit cards, 95% of the processing platforms have already been upgraded and certified to support credit issuance of EMV in the US for Visa. And about 50% of our bins that support credit volume in the US have already been upgraded to support EMV. So even though we have about 6.6 million cards in market, the back-end systems have already done a lot of the certification work to start turning out cards. Also, from the April 2013 mandate that we had for the acquirer processors to be able to pass chip data, about 99% of the payments volume in the US is represented by the acquirers that have certified their platforms to that mandate. There's a few small platforms that are still working through certification, but we have about 99% of the US face-to-face sales volume from a processing point of view upgraded on the acquiring side to be able to support chip data. So we're in really good shape on the back-end system side to be able to start moving forward to the liability shift. We also see, for those issuers that have been selectively issuing credit cards for international acceptance, and some debit cards as well, primarily credit, that for a cross-border point of view, meaning when a US cardholder travels outside the US, 8% of that transaction volume is already chip-on-chip. So the issuers have been issuing cards to international travelers, to the right folks who, when they travel outside the US, they're being able to use those chip cards at chip terminals. So we're already seeing a pretty good increase in our chip-on-chip transaction volume where there are terminals mostly outside the US. From a global point of view, for those of you who kind of are getting a perspective on EMV and the size of it, EMV codes numbers are about 1.6 billion EMV cards issued around the world. And that's across the different participants within EMV Co. So Europay, or not Europay, sorry, that's the old acronym. Visa, MasterCard, American Express, and Discover, so forth. So 1.6 billion cards around the world, even though we only have about 6.6 Visa cards issued as EMV in the US, that should give you some confidence that the rest of the world's been able to do this. Even though there's some challenges and some things that we need to learn, we can all get there as well. And then from an acceptance point of view globally, EMV Co's numbers are 24 million terminals have been deployed globally that support EMV. From a Visa point of view globally, we have just under 1 billion Visa cards that are issued as EMV, and about 43% of our cross-border transaction volume is coming out of chip terminals. It doesn't always mean it's a chip transaction. It could be a magstripe card being swiped, but it's at a terminal that is capable of sending through chip data and doing a chip transaction. So we have a pretty good deployment story already, and in the US, particularly on the back end from an infrastructure certification point of view. In terms of acceptance around the world, we really have very good POS acceptance volume penetration. This speaks a little bit to the 43% of cross-border transactions are coming out of chip terminals globally. Latin America, the number there is 31% for the point of sale. It's actually very high in countries like Brazil and Mexico, and then other countries around Latin America are still working through their deployments. So there are certain countries in that region that have pretty much 100% acceptance, like Brazil and Mexico, and then there are some other countries that are still getting up and running. Similarly, in Europe, which was pretty much where EMV started, they have 90% of the point of sale, and then CEMEA and Asia Pacific and Canada have very high volumes as well. And on the US, we're still working on our roadmap. One thing you'll notice is that on the ATM numbers in certain regions, they're rather low. And that's because in some of these markets, until very recently, there wasn't an ATM liability shift. So there's very recently a global ATM liability shift for Visa. So the date that we have for October of 2017 for the US ATM liability shift also is in effect globally. So the global liability shift for ATMs is October of 2017 as well. So you'll start to see these ATM numbers for ATM chip volume going up dramatically in those other markets as we get closer to 2017. So lessons that we have learned from around the world, and this is probably not news to many of you in the room, but fraud very much migrates. It migrates geographically, it migrates from credit to debit or from debit to credit, depending on which products go first. It migrates by channel from point of sale to ATM, and it can also migrate across bins and portfolios from an issuing point of view. And so we have some lessons learned to share, but what we've certainly seen in Canada, where credit cards went first, the credit card fraud went down, but then fraud started migrating to the debit cards because the debit cards hadn't migrated at the same pace as credit. So then they needed to quickly start deploying EMV on their debit cards. Similarly with Brazil. Brazil had pretty much 100% penetration of chip terminals in the early days because the infrastructure was upgraded rather quickly by a single acquirer, which was VisaNet do Brazil at the time. So we wanted to make sure we got EMV out in that country. So EMV in Brazil, from an acceptance point of view, penetration was very high. And then the issuers started rolling out on their credit cards early on, and then later on their debit cards, but they only did it on the very active cards and active portfolios. And then the fraudsters started seeing there are still some cards in certain bank portfolios that haven't been migrated to EMV, I can attack those. So from an issuing point of view and from an acceptance point of view, we want to prioritize where the implementation goes in terms of terminals that might be in locations that are high fraud areas or high fraud merchant segments, cards that might be the ones that are traveling or transacting frequently from a business case point of view. But ultimately, we are trying to get to 100%, and that's a very long tail of chip-on-chip implementation. From France, we also have some lessons learned where the point-of-sale environment, counterfeit fraud went down, but then card-not-present fraud went up. And that's why Visa and many of our other payments infrastructure counterparts are working on better solutions for the card-not-present arena. Part of why we announced the tokenization standard back in October and why we're continuing to move forward in how we can better secure the card-not-present space, because EMV certainly addresses the card-present space, but we want to continue to move forward in securing the whole payment ecosystem. So EMV is not a silver bullet, but it does help secure the card-present space. We recognize there's more work to do in the card-not-present space, and that's why we're moving forward with things like tokenization. And then in the Netherlands, this is also speaking to the geographic migration of fraud, and a little bit of what we're seeing here in the US now is where a lot of the countries around the Netherlands and Europe went to EMV, and the Netherlands had a very low domestic fraud rate, and so they didn't go to EMV in the early days. And they started seeing geographically the fraud was moving into their country as their neighboring countries started moving to EMV. And that's what we're seeing in the US. We've seen in Europe and in Latin America and in Canada and Asia Pacific, the fraud has been going down dramatically. In most markets, a few years after the liability shift has taken effect, the counterfeit fraud has gone down by 50 to 60%. Whereas in the US, we've seen the counterfeit fraud go up from 2004 to 2011 by 300%. So we've certainly been one of the beneficiaries or the recipients of fraud migrating around the world. Not a beneficiary, certainly a recipient. So legal kind of cleansed my slides before I was presenting today. So all the numbers on the axes of this slide had to be removed. But it's still illustrative of the example. So I know we all love our legal departments. So what the y-axis is supposed to represent is, from a counterfeit fraud point of view, the amount of basis points of sales counterfeits representing. And the x-axis is, of course, over time. So if you look at the line that is a blue line that spikes up in the early part of the graph, that's where counterfeit fraud did a big spike in Brazil, and this is on a quarterly basis. At that point in time, chip penetration in Brazil, chip-on-chip transaction volume, was about 20%. So there was still a lot of green field for the fraudsters to go out and attack and to make counterfeit fraud happen. But as the penetration level of chip-on-chip transactions went up to about 60% in that country, we saw that the counterfeit fraud had gone down dramatically. And so we do have some business case numbers from Brazil that we can share with clients and a little bit more private settings. But from a trend point of view, we certainly see that there's an inflection point of around the liability shift. We tend to get around a 40 to 50% penetration in a country of chip-on-chip transactions. And then there's a very long tail of the rest of the terminals and cards moving. But we certainly see a very strong benefit at that 40 to 50% of chip-on-chip transactions volume of counterfeit fraud trending down. And similar to what I was mentioning early on how fraud migrates, Brazil certainly has done some detailed business case analysis, and they saw a dip after their liability shift and penetration rate. In 2008, their counterfeit fraud started going down, and then it started going up again as the fraudsters learned which cards had not yet been migrated and which ones they wanted to quickly attack and take advantage of before they got converted over to EMV. So Brazil has been doing a very quick mop-up program to get the rest of those cards either deactivated or converted over to EMV so that they're not subject to fraud. CHIP also does improve authorization rates, and this is kind of more just for the issuers in the room in terms of the business case. You know, it's hard to put a real dollar value business case on EMV because there are so many variables. And I think some of the good quotes that have been coming out of the news discussions in the last few weeks has certainly been, we recognize that moving to EMV is where we need to go. Different parties have different types of business cases, but it's kind of hard to put a business case on doing something that secures the payments infrastructure and provides consumer security and confidence in the payment system. But there's also some other benefits we've seen from an issuer point of view and from a merchant point of view in terms of less friction at the point of sale, fewer declines, higher authorization rates. And so from Brazil, we did a case study, and their domestic approval rate pre-going to CHIP was about 85%. After they went to CHIP, the issuer is getting better data on those CHIP transactions. They're getting the validated cryptogram. They have a much higher confidence that it's not a counterfeit transaction, and so their authorizations rates went up. So domestically, they went from 85% to about 93%. That was at that point in time from May 2009 to April of 2010. They're continuing to get better in driving up their authorization rates. And also cross-border, their approval rates went up by 14%. So that means those issuers had more transaction volume going through. They had fewer dissatisfied cardholders who were being declined at the point of sale for perfectly good transactions, fewer false declines, and so forth. And same thing on the merchant side. They get faster sales and less friction at the point of sale. So an additional $40 billion in payment volume just from that 1 year of April of 2009 to, or May 2009 to April 2010. So it's just one other component of how EMV does help in addition to the security. So speaking a little bit to how quickly do we move to EMV? I get the question kind of a lot is, what do you expect by October 2015 the market to look like? How many merchants will there be? How many cards will there be in market? And that's a little bit hard to predict, but what we've seen from around the world, here's the example from Canada, which is the most recent market to have gone to EMV, is that around the liability shift date, which for Canada was October of 2010 for cross-border, and I think it was March or April of 2011 for domestic, they were at about 42% of POS devices, 48% of cards, and from a chip-on-chip transaction point of view, or sorry, chip-on-chip transaction point of view is about 26%, 59% of devices, 77% of cards. So you start to see there's a high penetration of cards, high penetration of devices, and then having those card holders match up with where the terminals are, that's where we really start to see the chip-on-chip transaction volume go up. So it was about 26% at the liability shift in Canada, and then a year following the liability shift, it got to about 40%, and then another year later than that, it was about 70% in mid-2013. So we're starting to see that as the penetration of cards and terminals goes up, certainly the penetration of chip-on-chip transactions go up. From other examples around the world, we've also graphed Brazil and Australia and Canada. And the x-axis is kind of adjusted for the date of their liability shift because those markets all had different liability shift dates. But what we see is at the liability shift date, on average, we get to about 45% chip-on-chip transaction volume. Brazil is a little bit of a unique case because they had 100% penetration of terminals already by the liability shift date. So they already had that payment infrastructure in place that they had been laying the foundation for many years prior. But Australia and Canada are very similar in there was some spotty implementation of EMV in the 2 years prior to the liability shift date, but closer to the liability shift and following liability shift, the transaction volume and the penetration level of EMV really went up. But you can see there's still a long tail. So we do see that it takes about 6 years after the liability shift date to get to about 90%. That was what we experienced in Europe, and that's what we've been experiencing in some of these other markets as well, is on average it takes about 6 years following the liability shift date for a market to get to 90% chip on chip. So what does that mean for all of us in the room? It really means that we want to be targeted and focused. We certainly have the liability shift date as an incentive to move the market this way, but it's not a hard stop mandate. It's not something where we expect 100% penetration. We certainly want issuers to be focused on which portfolios make sense for me to migrate first, merchants to be cognizant as well as which locations do I want to upgrade first, where are my high fraud areas, from a merchant point of view, are they susceptible to counterfeit fraud, and what makes sense for the different participants in the ecosystem in terms of migrating to EMV. For issuer best practices, we really want to kind of hammer this home a little bit because I think with the conversation that's been happening about chip in the last 6 weeks as a result of some of the breaches and so forth, we've been hearing a lot, again, the term chip and PIN. And from a Visa point of view, we really want to make sure that the message is, at least from a credit point of view, we are not encouraging issuers to move forward with PIN in conjunction with chip. So we're very much advocating to mimic MagStripe, and there are several reasons for that. One reason is certainly if we're going to meet any kind of penetration levels of the liability shift date, doing PIN on credit for issuers in the US is too complex and too expensive. We can't do online PIN on credit in the US easily because the infrastructure doesn't support online PIN on credit. The rest of the markets around the world, for those of you who haven't been in the details on chip and PIN and what that means, the other markets around the world that have done chip and PIN, and not all of them have, many have done chip and signature, excuse me. Those that have done chip and PIN have typically done chip and offline PIN. And this is where the PIN is stored in the chip in the card, encrypted in the card. From an issuer point of view, even though there are some solutions available to manage offline PIN management, for a market like the US, that's extremely complex and expensive for an issuer to contemplate doing. So one, it increases your key management costs, and it also, from a cardholder experience point of view, it's very challenging to manage. Because if you have an offline PIN stored in your card, it can't be synced easily with the online PIN cardholders are going to use for transactions at the ATMs. So other markets around the world, like Canada, for example, they have fewer issuers that have very vast ATM infrastructures, and even some of those issuers have said that doing chip on PIN on commercial cards and so forth has been really challenging for them. So if you take, for example, an issuer who might be based in the East Coast, might have cardholders all across all 50 states, but they don't have an ATM footprint that really serves their cardholders in California or Alaska or Washington or Hawaii. And if you issue a chip and offline PIN card and your cardholder doesn't know that PIN, the only way to change that PIN is to go to an issuer branch or to an issuer ATM and change that PIN. And that's been something that we've really been trying to educate the issuers on, is you really need to have a strong understanding of how you would manage offline PIN synchronization and offline PIN management. So from a business case point of view, we've also tried to address the very, very small sliver of cases of where chip and PIN may be required from an acceptance point of view. Because that was the most common question we got from issuers is, if I'm going to invest in chip, don't I have to do PIN as well to make sure my cardholder is going to have the best experience when they travel abroad? And so we looked at how can we realize the best benefits for the issuers with the least amount of cost. And so we implemented some new rules in the fall that we just announced in October that go into effect this April and next July. So from April of 2014, all new unattended terminals that are deployed around the world must support what's called no CVM. So they must be able to support a card that doesn't do PIN. And then from July of 2015, all existing unattended terminals around the world, every train kiosk, every bike rental stand, every vending machine and gas pump needs to support no CVM from a Visa point of view. So that takes a lot of the uncertainty out of the equation for the issuers as to, don't I have to support chip and PIN to make sure that my cardholders have the best acceptance experience abroad? So that was our way of addressing that from an acceptance point of view and from an issuance point of view. In terms of the lost and stolen situation, lost and stolen is less than 1 basis point of fraud for us. Issuers in the US enjoy very sophisticated risk management solutions. We have 100% online transactions. We're recommending that issuers issue their chip cards for 100% online authorization. We've done some studies, and some of our issuers who in the early days thought they needed to do the fully loaded EMV experience and did offline authentication and offline authorization and offline PIN, when their cards traveled, less than 0.1% of the time, if that card that supported offline authorization went to a terminal, was offline authorization ever used? So we have some good numbers, and Simon Hurry certainly has been doing a lot of in-depth analysis on this because he's the one who bears the brunt of the questions. For those of you who know him, he spends a lot of time on the phone with all of you in the room, I imagine. And we really strongly believe, from a business case point of view, from an implementation speed and cost point of view, and from a cardholder experience point of view, issuing a card that supports online authorization, online authentication, and the same CVMs you use today. So signature and no CVM on credit, online PIN for cash access at ATMs, debit using signature and online PIN and no CVM as you do today. Mimic the MagStripe environment. Going to EMV is already going to be complicated enough for this industry. Trying to implement new features of EMV that were invented almost 20 years ago for markets that needed a lot of offline functionality doesn't make sense. It doesn't make sense in a lot of the markets outside the US any longer, and it certainly doesn't make sense for the US. So we strongly believe that, and there's a lot of business reasons for it. From a cost of implementation point of view, also from a time for all of us in the room to get to liability shift, October 2015, for those of you who are trying to get significant amount of your issuing portfolio upgraded by that date, and even by October 2017 and beyond. Contemplating things like offline authentication and offline authorization and offline PIN is only going to make it more expensive and take longer for you. And there's not really a business benefit of doing so. I'm happy to talk about that more offline if any of you have questions. From a timing considerations point of view, the liability shift date, as we've talked about, really starts to lead to a ramp up in getting to coverage, but we are going to see a long tail. We also get questions from issuers from a portfolio point of view about, should I do a contact card or should I do a dual interface contact and contactless card? Certainly for those of you who are new to EMV, the MagStripe stays on the card. We continue to support MagStripe for global interoperability. But we're also going to be, we support both. Contact-only cards are a little less expensive than dual interface cards from a chip point of view. But there are many municipalities and many areas that are starting to move from a transit point of view to contactless. And that would really be, and I think Karen Zach's going to talk about this later on this afternoon, at least from a Visa point of view, there may be some benefits for certain issuers who have significant cardholder footprints in these areas like Washington, D.C. and Chicago and New York that are moving to open acceptance at the transit fare gates, where making a dual interface investment might make sense. For everyday payment cards, contact chip only is pretty much going to cover you from a counterfeit point of view and probably meet most of your cardholder needs unless your cardholders live in an area where there's sufficient transit acceptance for contactless. We're also talking a little bit about debit, and I've got to quickly wrap it up. But I think this has been some of the conversation that we as an industry have been having for the last year and a half, is really what are we going to do about debit? And how are we going to have Durbin compliant cards? And there's been a lot of very good conversation. And so Visa and MasterCard announced back at the end of July that we have cross-licensed each other's technology such that if it's a Visa debit card that has Maestro on the back, an issuer can move forward and use the Visa application and the Visa Common AID, have it be a Visa debit card that can also support Maestro transactions. Similarly, if it's a MasterCard debit card that has Interlink on the back, Visa has agreed that we will allow Interlink transactions to come out of the M-chip application. So for issuers who have Visa Maestro or MasterCard Interlink, there's a path forward. We both announced around last January, February that we would license our technology to the industry, and we've furthered our terms into how we would license that. We've been having some very active conversations in the last few weeks with all of the other debit networks as well. And so our offer is still that we would license our technology. We firmly support a lot of the work efforts that have been going on in the EMF Debit Working Group. The solution that we have is consistent with the EMF Debit Working Group's path forward, and we would strongly recommend that the industry solidifies around that solution and continues to move forward. So in terms of key takeaways, EMV has been proven to reduce counterfeit and also lays the path for innovation and improves authorization rates, something that we shouldn't forget. Fraud does migrate to the path of least resistance. From an issuance point of view and from a merchant point of view, consider a prioritized approach. Convert the cards that are the most active or that travel internationally. Convert merchant locations and terminals in areas where there tends to be a lot of cross-border activity for inbound chip cards coming in from the liability shift date that goes into effect of October 2015 is cross-border as well. And then continue to expand into lower fraud areas as we move forward. From a back-end systems point of view, issuers also need to think about, since I also manage Visa Advanced Authorization and Visa Risk Manager, how you augment your fraud management strategies. How do you change your authorization practices? How do you change your case management practices now that you're getting enhanced data coming in from a chip transaction? Chip is not our silver bullet. We recognize it. It has a lot of concrete benefits, but we're also focusing on other areas like card not present and tokenization and how we continue to secure other channels where fraud may migrate as we move to chip in the US. For those of you who are new to EMV, as Randy said, make some new friends because we really benefit from the experience of many folks in this room who have done EMV in other countries, who have done EMV already in the US. Many of the processors and partners that we have in the industry, the card vendors and terminal manufacturers in the industry, have a lot of knowledge to share. So we really benefit from almost 20 years experience of EMV around the world that many folks in the US can get up to speed on EMV rather quickly from the experience that we all have to share with each other. And as I mentioned on the best practices slide, take advantage of the streamlined approach to EMV. There's a lot of things you can get yourself tripped up on, but doing a simplified, streamlined implementation for EMV is going to minimize interoperability issues and drive down the cost and improve the speed of getting to EMV in the US. And that's it. Thank you. Okay, so I think the next speaker is going to be Jim Stapleton from ISIS. Oh, I can take questions. Okay, I didn't know I had enough time. I'm happy to take a few questions if I have a few minutes. If you could please come to the microphone.
Hi, thank you for your presentation. And I will admit I'm somewhat intrigued by the increased acceptance within Brazil, and I'm wondering how much of a special case you think that Brazil is, because I'm thinking that US auth rates are pretty good. So if we're thinking about US chip on chip, would that really move the dial for us?
In terms of improved authorization rates for you?
Yeah.
So from an issuer point of view, when it comes to the, thank you for your question. For the improved authorization rates that we experienced in Brazil, Brazil is a little bit different from an authorization and approval rate compared to the US. The US, we do enjoy, across the board, higher authorization rates already. But there are certainly some issuers in the US that have tightened down or limited their authorizations for cross-border transactions. So even though domestically we have very high approval rates and authorization rates, for cross-border, some of our issuers have rather low approval rates and authorization rates. So if you think of the benefit to US issuers, and the US being one of the later markets to EMV, as soon as you implement or issue an EMV card, particularly for cross-border travelers, the likelihood that that card's going to be accepted at a chip-capable terminal is really high if it goes outside the US. So from a cross-border authorization rate point of view, we should expect US issuers to have some bump because there would be a chip card transaction most likely when the card travels outside the US. You get the chip data as part of that transaction, so you have higher confidence in approving that transaction, at least from a counterfeit risk point of view. So it really depends on each issuer's individual practices, but we will benefit from the fact that most of the rest of the world has gone to EMV, certainly where we see most of the transaction volume coming out of. Hope that answers your question.
Great, thank you.
Thanks. Any other question?
Stephanie, I have one quick question, just to talk about that 6-year tail you mentioned after the liability shift. And I can certainly understand and appreciate the merchant side of that tail because of the choice to invest for infrastructure. Right. On the issuing side, I question, particularly based on the stats you gave about Brazil, about why that would be likely to see this many cards still not issued post-liability shift date when those cards would have expired after the liability and had to have been reissued again without a chip on it. Could you explain that?
Certainly, and I don't have any hard data numbers to illustrate this point, unfortunately, but other than the fact of what we've seen around the world. But in Brazil specifically, we had a 100% penetration rate on the acceptance side. So issuers knew as soon as they flipped over a card, it was going to be accepted as chip domestically. And a pretty high likelihood it would be when it traveled cross-border, except for into the US, which is where they had a lot of their authorization challenges. From a long tail point of view, and I think this is probably analogous to what we see in the US, or like the situation in the US. I know my wallet, I have about 15 different credit cards because I have a Banana Republic card, and I have a Nordstrom card, and I have a Gap card, and then I have, you know, my United Visa, and I have an American Express. Oh, Karen's left. I have a Starwood American Express. So I'm a loyalty point junkie. So I have tons of different credit cards. Now, Chase might upgrade my United Mileage Plus card rather quickly because I use that all the time. But Capital One might not upgrade my Venture card very often, you know, as quickly because I'm not a cardholder that uses that as often. So I think issuers are going to be selective on cardholder by cardholder base and portfolio by portfolio base is who do I issue this card to. So, and in that example, I have a lot of different loyalty points programs, and so I'm a 5-time-a-day transactor on my United Mileage Plus card. But I only use my Banana Republic Visa card every once in a while, mostly at Banana Republic outlets, sometimes at the Visa cafeteria because I get an extra couple points if I use it in non-Banana Republic-owned property. And I think that there are a lot of cardholders in the US who have a lot of these store brand credit cards that might not get upgraded right away. But the fact that I do use it sometimes at a non-Banana Republic merchant location means that my card is open to being compromised. If I use it at the Visa cafeteria, hopefully it wouldn't be compromised there. But if I use it at other merchant locations, my card number's out there. And so it's open to being intercepted from data breaches, and it might not be the one that gets issued as chip rather quickly, because each issuer is going to have to make its own investment decision. So that's one illustration of probably multiple examples of how it's going to take some time for all the cards in my wallet to be converted over to chip. And, you know, I don't want to mention the retailer's name, but one retailer card I've had for like 12 years, I never shop there anymore. I never even use it. So they might just send me a letter and say, I'm going to deactivate it, but some of those retailers keep those cards open just because there's the chance that that cardholder might use it. And there's a chance that if I might use it and it's not been converted to EMV, that might be the time that that data gets compromised and is then used for counterfeit. So I think that's part of the answer. There's one more question that I think I have.
So I have a question about EMV contactless. I heard you say that Visa was going to support a signature only for the contact EMV, but what about contactless? Will the rules remain the same there? Or is there floor limits so you don't have to sign, you don't have to
Okay, good question. And this speaks to kind of just the context of how complicated this can be. So when we say signature on credit, we support on credit no CVM today. So we already have merchants that'll take a credit card for up to $25 or $50. Some merchants are taking it for higher values of that with no signature. And we support that on credit and debit, whether it's MagStripe or contact or contactless. So we have what are called the Visa Easy Payment Service, which has different limits for where a signature or a cardholder verification method is not required. And that would be the same for contact or for contactless. So as we start moving more to chip, we may see for chip authenticated transactions that cardholder verification method requirement limit goes up. So today we have it at 25, pretty much across the board. There's some segments that are 50. And we may start to see that as we get better data, more dynamic data coming in the system, we have higher confidence in that transaction being a valid transaction. We may start even getting rid of the signature requirement or the CVM requirement on higher value chip transactions. And that's where we're moving towards. So we do support no CVM on contactless, but if it's a $150 transaction, certainly we still want the cardholder to sign for that. Okay, thank you all for your questions. I'm going to be here for today and tomorrow, and certainly